So in this video, I'm gonna keep it real short, real simple, and explain to you in like 4 minutes basically how to trade, how to find good trades. I always tell people we don't know what's gonna happen, what a stock is gonna do. But once a move happens, we can either catch it in continuation or we can catch a retest of a broken trend. So what I like to do is just play retest. That is when you have the highest probability in your favor. So a retest here that we're looking at right now on SPX is you have resistance here. Whether it broke through or not on August 12th, I couldn't tell you what was going to happen. It started to break through and I could have said, okay, yeah, I'll take calls. You ride it up and you take profit. It breaks, right? But what I care about is I don't know that that's going to happen. Once it does happen, I know that sometime in the future it's going to come back and retest that error. That's the first retest. Retest that error, nice bounce. You come back down a couple of days later, you retest that same error. And now, even if you miss that, you know that you got support right here. And you say, okay, there go my support. And then there go the end of that retest. So I'm going to keep my stop somewhere in between there. You get a nice bounce. Then we come back again today and we gapping down. So you probably thinking, okay, yeah, this might fail. I personally did not short it because market just crazy. And I personally really rather just wait for retest. So what do? Next thing I'm going to do is once SPX comes back up here, I'm just going to take short the retest. And I know that I can put my stop somewhere around here, probably by a little bit of time. Depending on how the market look, I might go 0-day expiration. I might go next week, 10 days, something like that. Buy a little bit of time and just sit and wait. Because if you take the analysis a step further, what happens after the retest, that's when people start talking about candlesticks. This candlestick is telling us that SPX probably wants to fall down, but you got to break below 42.1870 to trigger that, right? Because this is what they call a bearish pin bar. Don't worry about what it's called. You see that this is telling you it want to go down. You find these on like a weekly time frame or the opposite of it, which would be a bullish pin bar or hammer, whatever you want to call it. Basically a long wick at the bottom or a long wick at the top. It's telling you where you have strong price action at. You had strong buyers down here. Now you got strong sellers up here. That's why you got a long wick. So if that break to the downside, there go your continuation. Next thing you ask yourself is, okay, where's the next retest? Where's the next big level of support? So the next retest is right here. That's where you got your last supply, right? So you can imagine if price gets back down here, you probably don't want to be short. But if it rips through, you say, I'll just find a retest on a lower time frame. Who knows? Maybe it bounces and goes back to all-time highs. I doubt it. But you really just never know. But let the market do its thing and then just play a retest. And I mean, that's really it. Just find retests, let stuff happen. Know a little bit about candlesticks. You could trade this without knowing anything about any type of candlestick, simply just off of simple support and resistance, because that is all that matters. The candlestick stuff is just extra information, if you will, but it doesn't really matter. But there go two examples, two critical supply and demand areas that we're looking at for the next week coming up. And there you go. There goes a trade idea if you would like to take it, but not any type of advice at all. But that's keeping trading simple. Supply, demand, support, resistance, retest. So just play retest and you'll be all right. Keep your stops tight.